Hi everybody, today's video is all about moving averages. So moving averages are simple lines, they're wavy lines that are put on to a chart. They're actually drawn for you once you call the moving average up, and you can choose what period of moving average you're using. So for example, if you put up a 50 moving average, so if we put up a 50 moving average, the moving average will be measuring the average of the last 50 candles. Okay, so let's make that red and so you can see it. Okay, so the moving average line here is measuring the average of the last 50 bars. So just to go back to basics, whenever price is above the moving average, it's usually going up. Price is usually increasing. Your highs are getting higher and your lows are getting higher. When the price is below the moving average, let me show you what I mean by that. Price is usually falling. Okay, so as you can see, the lows are getting lower and the highs are getting lower. And you can use moving averages with different lengths or different periods. For example, this is using a 50, so it's measuring the average of the last 50 bars. You can also have a longer term moving average, let's say a 200. So we put the 200 on, which is measuring the average price over a longer period, 200 bars. And as you can see there, the moving averages do change direction or change the way round they are printed. So for example, here the 50 is above the 200, so price is going up. And when price is going down, the 50 is below the 200. So they do cross. They do cross, as you can see here, and when they do cross, it means that the direction is biased changing to the upside, or when they cross to the downside, the direction is changing to the downside. But this video isn't about moving average crosses for now. This video is all about showing you the different lengths of moving average and the different types. So for example, now we have got on a 50 moving average. We can see price is moving up. I'm now going to show you a different type of moving average. I'm going to show you the SMA. Okay, so it's a simple moving average, same period, different color. But as you can see, the 50 SMA is a little bit different in relation to position, because it's calculated over the whole of the 50 candles, whereas the exponential moving average, the red one, is weighted to the most recent data, the most recent of the 50. Now there's another moving average I want to share with you, which is called the whole moving average, and this moving average is completely geared over dynamic price movement. I'm not going to explain to you how it's calculated because I don't know, but I'm going to show you by putting on a whole moving average how different that is over the same period. Can you see how dynamic it is? So this means that we can use the whole moving average to get in and out of the market when they cross, because they tend to cross a little bit sooner than when the other moving averages move. They're very static compared to the whole. So the whole is very dynamic. So whereas here the price is going up and down and the 50 EMA and the 50 SMA are going quite flat, the whole EMA or the whole moving average is moving quite dynamically. So we can use that in our trading decisions. So I'm going to create a strategy, and the strategy I'm going to create is going to use a whole moving average and an exponential moving average. So I'm going to use a 50 whole moving average. I'm going to do it on a 30-minute chart, and I'm going to also add on an EMA, the 200. So this is a variation on our strategy that we used before, but this time we're hoping to get a little bit stronger results, purely and simply because we're using a much faster moving average. Okay, a much faster moving average. So I'm going to put this onto euro dollar, because that's really the first port of call with this. Let's just There we go. So there's euro dollar. Okay, as you can see, it crossed here and bang, we've got some really strong movement. That's a good move down there. That's a good 40-50 pips move there. So what we need to do now is we need to now get this put into our trading platform. So let's put that in and let's create the strategy. But first of all, before I do, I've already back tested some of this today. We created the strategy. So here we go, view. Okay, the view the whole EMA, whole cross EMA. Let's look at the algorithm. The algorithm is open sell if whole 50 crosses below the moving average 200, sell, and if the whole 50 crosses above moving average 200, we're buying. So in essence, what we're looking at there is we're looking at that there and that there. When these cross, we're going to be selling to the downside, and when they go up, we're going to be buying to the upside. So we've back tested this already, so I'm not going to back test this in front of you. I'm going to show you some of the results. Okay, so the history of all the tests. So this is the history here. So we've back tested it on all instruments, and we've got some good positive results. Okay, we've got 395 when we tested there on euro dollar. That was in 1 month, and here it says 15.15. So 1,500 pips of profit in the period we tested. Let's show you the profit loss chart. Okay, so this is the profit loss chart. Very strong equity curve, especially this year. Okay, we've got a good 800 pip of profit just this year from there up to there. So that's a really, really good return on this strategy. There were some other notable performances. There were some positive ones with Aussie yen here. There was positives with CAD yen. There was positives with euro pound. And euro yen was almost 1,200 pips of profit. Pound yen was 713. Kiwi CAD was 266. So had you been running all of these positive result pairs, even gold had a little bit of profit. So there's about 6 or 7 pairs there that you could have used with this strategy and made a positive impact on your trading account. Now remember, all of these trades will be executed directly and automated by ATS, by trading sites powered by Tecton. So it really is a really good piece of kit, and what we've done over the last few months is designed various different strategies. We're constantly, our guys in the development team are constantly creating and back testing and finding strategies that work. And if you'd have run these 5 or 6 strategies over the period of, say for example, the last, say, 6 months to a year, you'd have been sitting on a very healthy return, and none of this would have had any input by you, the trader. It would have all been carried out by ATS, by trading sites powered by Tecton. So guys, you know, now is the time to take action. If you sit on the side and just sit there trading manually, you know, you're going to find it's going to be tough and you're going to struggle. However, using ATS by trading sites powered by Tecton, which is free to use depending on the broker you use, so contact us on our website that you see, and our contact details at the back end of this video, where you can see exactly how you can get yourself on board with this. We're getting some good responses from our webinars. We're getting some good responses from people that are using ATS in Africa and in Europe. So now is the time to take action if you really want to give your trading an edge and really get back into trading for the reason you got into trading, to give yourself more time, not spend more time doing it. And remember, you don't need to understand how algos work to run an algo system. You certainly don't need to have coding knowledge to be able to create an algorithm, and you certainly don't need to be an IT genius to be able to create one. Our system uses simple drop-down menus, and if you look on the videos that we have on our YouTube channel, we really have got lots of information there. So that's all for me now. Have a great rest of the day, enjoy the weekend, and speak to you soon. Bye for now.